Hello, everyone, and welcome to Know Your Shit podcast, where our knowledge and pride in what we do drives us to be excellent. My name is Josh Cadillac, and once again, I'll be in the driver's seat for today's show as we learn how to stop chasing paychecks and how to start closing customers for life. And we learn this by talking to some of the most successful people in business to see how they were able to achieve success, how they got ahead, to learn our own recipe for how we are going to take and build a business that we can be proud of. That being said, we have a great guest, and Chris, help me out here. How do you pronounce your last name, buddy?
Yeah, Vermeulen.
Vermeulen.
Yeah.
So thanks for being on, Chris. It's great to have you here.
Yeah, pleasure. Thanks for having me.
So why don't you tell everybody what it is you do, Chris?
Yeah, so long story short, my core focus since I was in high school has been in the finance space. So I got it stuck in a stock market challenge in I think it was grade 11. I was 16 years old, and I fell in love with the stock market. First few trades were huge winners, and it became my video game. Now I grew up. Long story short, I grew up in the country with no TV. So I was like hunting, fishing, building things, zip lines, you name it. I was building all kinds of having fun. I was very creative. And so when I went to Toronto for college, I had cable internet or cable TV, and I got hooked on two stations, Speed Vision and CNBC. And once I was old enough, I think I was 18, I had my dad co-sign on a trading account for me because I was still underage to technically have my own account. My first trade was in Palm Pilot. If you remember those phones with the little pencil, I was like, these are the best thing ever. And I turned like a $2,000 account into like $8,000 in 2 weeks. And I was like, I'm made for trading. That's what I want to do. So my specialty is trading. I have done it all since, for about 26 years now. Trading, I've done all styles from day trading to fundamental trading to futures to forex. And now my specialty really is I found what works for my lifestyle, as you just said, Josh. Like, let's get away from the hunting and chasing paychecks to like, let's create passive income. Let's create freedom of time. Let our money work for us. So I have found a strategy, and I've written a book on this, which is about how to invest in the stock market with 5 to 12 trades a year, riding waves in the market that happen all the time. There's about 5 to 12 waves, and I use ETFs. And instead of using leverage and expanding our risk, I use compounding our growth. So as we grow our capital, every trade we re-roll it into the next trade, and it compounds. So we get the power of leverage without actually increasing our account volatility. And so that is my specialty: is I manage my own money and I help others avoid the bear market. The reason I wrote this book and have shared the strategy that I've been doing since 2001 is because I think we're coming into a massive economic reset, the economy, I think in the financial system for all kinds of assets, stocks and currencies and commodities and crypto and real estate. I think we're going to get into difficult times. So I'm trying to share how we can identify these trends, how to avoid taking big losses, and how to actually benefit from chaos and move forward through a time of uncertainty and weakness. So that's my specialty. That's what I'm trying to just help as many people as possible. And yeah.
That makes sense. I mean, I kind of feel like we've been kicking the can down the road with paying the tab for COVID and
Yeah.
what you did economically with COVID. I mean, and the inflation, I think, is a direct reflection of the mass amount of printing of money, like all the things we did to deal with putting off a economic crisis simultaneously with a medical crisis. So they said, all right, we'll print a bunch of money, kick the can down the road. We'll
Yeah.
create the financial crisis later, and we'll deal with the medical crisis. Well, it feels like they've been kind of staving off
Yeah.
paying that bill, and it seems like it's at some point it's going to come due, and it's whether or not there's a way to avoid it. I
Yeah.
mean,
And I don't think there is. I think like they can kick the can so far, but eventually we're seeing all the signs, not just in like North America, but globally, that things are starting to change. And when the overall global tide, like really all the markets, we're either all growing generally together or all going down. We have economic strength or not. And I think once that tide turns down, like there's no stopping it. It doesn't matter what they do with interest rates. It doesn't matter what they do. We're going to see things tighten up. People will change their mentality. Just like in the tech bubble, once that wave starts, you can't stop the whole world from having the same feelings and fears and selling. 2008 was the same. Once that tsunami starts, doesn't matter what they do. They might be able to slow it a little bit, but it'll happen. So I do think it's going to happen. But when does the can stop getting kicked, or when does it not really work anymore? That's
Right.
the question.
I mean, for me, and one of the reasons why, like, my crypto investments will always be done with my racetrack money, because as an investor, and you tell me that this has always been my philosophy. One of the things I always go to give me direction has always been history. So
Mhm.
when similar economic pressures are applied to this product, how does this product behave? Real estate, when there's inflation, I always do really, really well. I've just seen another series of disproportional appreciation, disproportional rent growth. Although rents have softened
Yeah.
uh, nationally, I don't know about internationally, but I know nationally rents have softened. But that's a phenomenon based on something else. But crypto always scares me because I don't have history for it,
Yeah.
and so for that reason, like I can't go in as hard as I can. Even with the stock market, I've always felt like I didn't know enough. There was always
Mhm.
something that knew so much more than me. So I'm trying to hang on, maybe ride their coattails
Yeah.
to figure out. For me, real estate, just because I have the exposure there, I knew it better, right? And so
Yeah.
that's why I allocate most of my portfolio to that. But in looking at it, I mean, the history, to see what we're going to do, and especially with the stickiness of inflation. I've been screaming about how sticky inflation tends to be. It's transitory and whatever. But we just got the producer price index number came out today,
Yeah.
and it was higher than anticipated. Um, the expectation for the Fed was just moved up for inflation. I mean, the number's not crazy high, but it seems to me, and you could tell me if you think this is true, that the consumer price index is consistently underestimating the real felt devaluation of money that consumers actually are getting. They keep pulling things out of the basket of goods
Yeah.
to kind of make the number seem a little less.
It's so fudged. Like, I mean, you could say United States or the whole world is like, it's like a giant game of Monopoly, and everybody's cheating, and everybody's just going to the bank and saying, "Give me another $500 bill," and I
Yeah,
got to pay rent to this dude over here. Like, it's all just a giant scam. We do need financial resets because that's what shakes things to the core. That's what straightens them up. People are going to get hurt, unfortunately, but you can't have, like in school, every kid wins a trophy now. You can't fail. Everybody's a winner. Come on, like we're creating the softest and weakest economy ever with just a bunch of fudged, numbers and printing, and we need pain. There are going to be people who suffer. It's just part of a free market. Is you're on the winning side or the losing side. You either learn a lesson or you learn a lesson either way. But I mean, you do need pain and resets to actually keep things progressing in the right direction. But as you said, the farther they kick this down the road, it's going to catch up. And when the music stops, it's going to be pretty ugly.
yeah. No, I mean, the stock market has been the one that I genuinely have not understood how it's kept its momentum through all this. Like real estate, we had 2008, which was a whole series of events, that kind of a confluence of events that
Yeah.
caused this major downturn in an asset type that typically doesn't see that sort of behavior. I mean, real estate moves, but it's the cruise ship of investments. It turns, but man, it takes a while to see it coming, and that was
Yeah.
its outlier event, right? Um, but the stock market, it seems unstoppable, unfazable, and I don't feel like there's the economic stability behind it to justify the pricing that we're seeing now. I mean, I throw in there, well, obviously the pricing is reflective of devalued money.
Yeah.
So, all right, that adjusted for inflation, how are those valuations? But even so, man, I mean, just as not knowing that I don't know enough and hearing you say it, it's kind of backing up, but like in the back of my head is like, I feel
Yeah.
like the bill's coming due, but maybe I'm wrong. I mean, as I was saying, like for real estate has these usual like 7 year cycles, and we're way past that 7 years.
Yeah.
But in my head, it's been, well, we were coming out of the correction and the overcorrection out of 2008. So we had this long period of kind of getting back to stable. And
Mhm.
then at some point that cycle restarted again, maybe, but I don't know when it is. I just know that historically, when there's inflation, my prices do pretty well.
Yeah.
And so this is going to be interesting economic times.
Yeah, for sure. I mean, yeah, I agree. The real estate market, I think it's a little frothy. I'm actually putting some properties up. unloading some real estate. I'm getting rid of self-storage facility simply because I think we're going to have an economic downturn.
Sure.
I have maxed that property out. It's full. I built it from scratch. I can't really make a whole lot more. It's cash for life. It is a good money making machine, but I have many more opportunities that I can actually amplify beyond that. So I want to take that capital when I think there's a financial reset over the next 12, 18 months, I think is when this is going to happen, and redeploy it into different real estate or into different investments in the markets, or I'm doing a bunch of other projects on the side. But we're definitely seeing that weakness. And I think the big difference is, we're talking about the fundamental stuff and things don't make sense. I think what makes me very different in terms of how I go about the markets is I really don't care what the news is. I don't care what the economy or the Fed or Trump or any of these people are doing. I'm a technical trader, 100% technical. Yeah, I listen to the news, but it plays no toll at all in what I do. I follow price. As investors, if we're long something, we own it, we want it to go up. If it's not going up or it's going sideways, I don't invest in it. We move out of it, we'll go to a different asset class. So we rotate. I rotate all my investment capital. It can go to real estate. It can go to the indexes. It can go to bonds. It can go to a currency. The US dollar has been one of the best plays. I'm in Canada. It's been one of the best plays for a long time, just to park my cash and then even trade on US equities, because we've gone from par with the US dollar to about almost $1.48. So it's 48% return just holding a currency, and then trading on top of that every year, we make even more. So it's all about knowing where that's going and just following the trends. And as you mentioned earlier, Josh, you ride the coattails, and I've found a way to ride the coattails, identify how strong a trend is. Is there big money flowing? So I think that a good example of it is I'm a surfer. I live on the water. I love kiteboarding and all that stuff on the water. And if you're walking down a beach in Florida and you see surfers out past the break, just floating there waiting, what are they doing? They're waiting for that set of waves to roll in, right? And you see them coming. And the stock market has 5 to 12 of these waves every year. And when we see the waves coming through, we pick the one that fits our risk tolerance. We hop on that wave and we ride that wave, and it might last 2 weeks. It could last 8 months. We just never know. But we can identify a strong wave with technical analysis, intermarket analysis, where money's flowing, how much is flowing to various assets. And the nice thing about riding these big waves is we also know when they're starting to weaken. So we can be like, hey, it's time to start locking in gains. Let's move our stop up in case it wants to roll over sooner than later. And then eventually it rolls over and we have a trend exit, or our trailing stop gets hit. We move out and then we wait for the next wave. And it removes all the stress of politics and Fed and rates and economic data that really gets everybody all in a kerfuffle, and they read the news every day and it's always negative. And I stopped watching the news over a decade ago. I hate negative stuff. I hate the news. I live in my own bubble here. I love it. And my kids and everybody else fills me in with weird, crazy news. I'm like, man, that sucks. So I'm like, your world, why do you want to be exposed to that? But anyway, that's how I see the markets. It's either an uptrend or a downtrend or no trend. And we take advantage of it and we rotate from one asset to another.
Good stuff. That makes sense. So what do you like best about it?
Well, what I like best about this strategy is it allows me to be really free. So everything I have is an end of day signal. And so because we have 5 to 12 trades a year, and I have the tools to say, hey, listen, like with followers who follow my work, I'm like, hey, listen, we're 3 or 4 days away potentially from a new trade. So we see something coming. And when we're in a trade, we know it's going to last for a few weeks or several months. We can also tell when we're like, hey, we're a few days away from potentially having an exit. But the nice thing is we don't have a whole lot to do. Like I can look in the morning and be like, okay, we're good. Nothing's going to change. Or I can be like, sometimes like this past summer, we got out of a trade and I told subscribers based on the charts and all the assets we track, I'm like, we have no trade for sure, at least for 2 weeks based on what needs to happen. And so we got to go and enjoy summer. And so, I check in the markets every day just because I live and breathe it and I help others. But really, it gives me the freedom to do stuff. I invent stuff. I have rental properties. I have self-storage. I'm part of a movie we're bringing to the market. I do all kinds of fun stuff. And that's what I like, is everything I do excites me. I wake up in the middle of the night with a brainstorm idea and I can't sleep. I just have a lot of fun things. And this whole strategy allows me to do that. And
maximize creativity. I like it. It's great
Yeah,
stuff.
yeah, yeah.
So where do you think all the success came from for you?
Well, my parents were entrepreneurs. They always had their own businesses. They were very successful. My dad retired. He had about 1,600 properties in Canada at one point. So
Nice.
I
You
understand
saw
real
it firsthand. You saw
I
it
saw
firsthand.
firsthand, lived and breathed it. I actually have some packages. So we use back in the day when there was lots of foreclosures, the banks would contact my dad and his partner because they were big players in Canada, and they'd say like, pick. They were more so into like gated communities, apartment buildings, big things like that. So these banks would come to them and they'd be like, "Here's all the stuff. Like, give us an offer, find one and give us an offer." And so like I've gone through some of his stuff. My dad would tell me these stories. It blow my mind. They'd be like, they wanted this much for it. And they would offer them like millions less. And the bank would be like, done. Like it's just crazy. Right.
When they have capital calls, man, when they need to raise capital, they will shed assets like nobody's
Oh
business.
my gosh, they bought an apartment building. The best one. They bought an apartment building. I think it ended up being like $21,000 a unit. It worked out to be. They did a little bit of lipstick on a pig, and a year and a half later, they sold them for like $70,000 a unit. And that was like in Edmonton or Calgary. It was there was an oil boom at the same time, which is it's an oil rich
Yeah,
area. But so long story short, my parents have made a lot of money. We also went bankrupt when I was a teenager. So we went from the top of the food chain, retired. We had a 11,000 square foot house and golf carts and fishing ponds and a squash court in our basement. We had a pretty good lifestyle, and we lost it all. And that was when I realized my dad had got into with an investor who was a couple of investors that were lying, and they scammed and ended up taking all the investment capital. But I realized you can go from the top to the bottom with one bad decision.
yep.
And what really hit me was one morning, I hear my mom screaming, and then I hear my footsteps, and I hear my sister screaming, and I come running in, and my dad was having a seizure. We didn't know what it was. We just thought he was dying, like,
Yeah.
and he was in bed, and it was because of the stress from, the investors he couldn't pay back. He had lost all their money from the scam that got taken down, and we almost lost my dad. It was the scariest moment of my life. I remember my sister looking at me at that moment, and she like mouthed like, "Dad's gonna die." Like it was the scariest moment of my life, right? And so I realized you can be, and he was doing Ironmans. He did an Ironman. So he was
Yeah.
like healthy, but financial stuff, if you don't take care of it, can kill you.
Eat your soul. Yeah.
Yeah. And so we went from the top to the bottom. I realized it can also take your life. It's very stressful. And I also, at the same time, was becoming a pilot. I became a pilot at the age of 16. And I had learned checklists. And I remember my solo flight, my instructor's like, "Hey, today you're going up alone and coming down in one piece." And so I grew up with checklists. I'm very logical. I'm kind of like like an engineer. I always build and make stuff. I'm a quasi engineer, not certified, but I've built it all, done it all. I get physics,
Yeah.
I get mechanical and all that stuff. So when I apply all that stuff like risk management and then checklists to the markets, I'm like, how do I build a system? How do I know this is a good trade? How do I manage this trade? How can I just put something into place where I'm like, hey, here's a new trend. It meets the criteria we're in. How do I manage that position? How do I know when that trend's coming to an end? So I have the technical background and very logic. I'm pure logic driven. I'm an INTJ for the Myers-Briggs, which is like I'm considered the scientist or the architect. And so the stock market and investing is like in my wheelhouse. I'm all about risk management and how do I make the most efficient way to do something with the least amount of time, the least amount of risk and stress and capital and leverage it to the max. And so that's what I've done for 26 years. And I do that with all my businesses. They all build and run on their own. And I leverage, I leverage information. I turn it into running machines, whether it's a real estate property, like a fourplex, threeplex, or self-storage, or a financial newsletter where I share my trades. It's all,
Yeah.
so that's how I kind of went through the whole cycle of from the top to the bottom and realizing it's dangerous in many ways.
Yeah. What do you think makes you passionate about what you do?
Passionate. Well,
You obviously care quite a bit. So sourcing that, where do you think the passion comes from?
Well, yeah, the passion. I don't know. Like I love challenges. I love education. The stock market's, you're always learning. I'm always taking courses. If I'm on the incline trainer, the treadmill, I am watching a course. I'll buy a course for like $15. I'm like, hey, it gives me 8 hours of treadmill time to learn electronics or learn whatever. So the
Yeah.
stock market is highly educational. I do other businesses and different things because it's always fresh and new, and I like to keep absorbing more and reaching these goals. But I don't want people like, I think seeing a lot of my family and people in our town, when my dad had the bankruptcy, when they had to go under, watching how many people lose their shirts, and then seeing other people around me, like in my neighborhood and stuff, that are older and they just don't have money and like they
Yeah.
can't do stuff. And I'm like, well, when I retire, which I'll never retire because I love what I do, but I am retired. My dad's like, you are retired. He's like, you do what you love and you make great money, and money's not an issue. And I'm like, you're right. So I just want to help people do something that makes them happy. And I read a book in college in Toronto called uh, "Do What You Love and the Money Will Follow." And it's
Hmm.
such a simple, basic concept. We all know that, and so the stock market, I love it. I'm a gambler at heart. I'm a very controlled gambler. I used to have my own blackjack table. I used to play a lot of poker. I played a lot of big tournaments. I used to teach poker. I used to have my own poker club. I used to build poker tables and sell them across Canada, United States. I love numbers. I love taking risk and pushing it to the limits to like win
Yeah.
without knowing I'm going to blatantly lose. Right? I say I'm a gambler, but I always have the house on my side. I
Yeah.
generally am
Yeah.
the house because I've figured out an edge. Right? So I just love the challenge, and I'm like, if I help enough other people find their passion, or at least if their passion is the stock market, if I can help them navigate it in a fun way, and we have a community and we all help each other, then that is what I want to do. You help enough people make money, and it just feels absolutely amazing
I can
to have this
imagine.
community of people.
I hear you, man. I know exactly what you're talking about.
Yeah.
It's a great feeling to see other people benefit from your labors. It's great to see you benefit as well, but when it's changing other people's lives, I don't know. There's a lot. It seems more rewarding that way in some
Oh, it's so
ways.
rewarding. Like yeah, it's so fun helping. Like, I mean, I help run several charities every year. I help start a charity group. We do 4 charities every year we raise, it's 100 men who care, we call it. We have 100 men and we all donate $100 in 60 minutes. We have 3 local charities come in and they give us a 5-minute pitch of what they would do with the money. We do other charities, and even subscribers to my newsletter. We're all part of this huge brain freeze for teen mental health we did a couple of years ago. We're the biggest team in Canada. We raised the most money out of Canada. Doing a polar dip. We won for the longest. We did like 6.5 minutes in ice cold water.
Hmm.
It feels so good to give back. It's so funny because when you're younger stages, you're like, how do I make as much money as I can? I'm going to buy all this stuff. And then as you get successful, you're like, how do I get rid of all this stuff? And I just want to do stuff that's passionate and it to help people. So my next thing that I want to do late this year, next year, is to buy a property where I can make a maker space. So I have my own workshop with tools and CNC machines and you name it. And I love inventing stuff. I invented the world's first flying jet surfboard. I patented, I licensed it out. I have a new project I'm working on that's going to actually probably be in this movie we're working on in the clean tech and mental health space. And I want to create this maker space where anybody, I don't care how old you are, how young you are, if you have an idea, come to the maker space and let's just prototype it and make it and see if we can build a business model and bring it to market. I just love the creativity of finding an idea, making it, and then business strategy is my specialty. I'm like,
Yep.
we can find a way to make money out of stuff,
Yeah.
and it's super creative and make it in a way that fits that person's lifestyle. I do a lot of business consulting, and it's great. It's
No,
yeah,
creativity is a wonderful thing, and having the opportunity to help people and allow them to be creative. I mean, I always say if you don't think, if you think the market is the pie is a fixed size,
yeah,
turn on Shark Tank. Nothing is better than, I mean, you turn it on and you're like, I didn't even know that existed. Now I have to have one.
yeah.
Like, it's such a good idea, you know? And the fact that people are out there that we leverage our gray matter
Mhm.
to try to recognize and solve other people's problems, because that's where it really is at. You find a problem, you identify it, you find a way to rectify it, and people will pay you for that. You will achieve wealth through that. I mean, it's The reason why capitalism has worked better than everything else we've ever come up with is very simple. You have to consider what your brother needs and how you can get it to your brother better than they can get it someplace else.
Yeah.
And it incentivizes the crap out of that. So while it's not perfect and it kind of leverages greed or whatever else you want to say, it's got you thinking about the other guy, what the other guy needs, and how you can get it to him better than he can get it for himself. So
Yeah, for
it
sure.
tends to make the world a better place.
Yeah.
Good stuff. I want to ask you kind of a different question because we've heard the good, but one of the things I always like to acknowledge is it's not all sunshine and rainbows. I'm a
Yep.
big quarter of that movie Rocky Balboa. Um, how do you manage yourself when there's unmet expectations, when it doesn't go the way it's supposed to, when things don't work?
Yeah, I mean, I've won at a lot of stuff. I've also taken some good beats. The losses are what move you forward. It's funny. It's like as much as they hurt, and I see things a lot different than I did, 10, 15 years ago. Whereas before I used to get super stressed. I'm like, it's the end of the world. Like everything's going
Yeah.
down. Now it's just like, that was meant to happen. Everything works out in the end. If you don't give up, everything works out in the end. Right.
Uh-huh.
But I've done a bunch of different stuff that never worked out, and even I started a health product business years ago with my dad. We went to China, sourced out some products, had some custom made health products, and we built a dealer network across Canada, United States. But while it was a huge success, and we sold the business just at the beginning of 2008, because I'm like, Dad, I'm ready to get out of this. Let's get it. Like the world's about to collapse. I could see everything in the stock market. I'm like, Dad, we need to get out of this. Let's just sell it. And plus, I don't really want to do healthcare anymore. I'm like, that was fun to build. But when we started the business, we had our products certified, and we ordered 4 container loads. At this point, he had finished his bankruptcy. He had no money. We scraped together some money. We put like 250 grand into these container loads of certified product and spent all this time doing it. The products arrive. We borrowed all the money. We were both broke, and they weren't certified. China totally screwed us over. It was a huge learning lesson. And our competitor, who happens to be in town, called the electrical safety authority saying, hey, they're not certified. Go check them out. And of course, they showed up like a week later, shut us down. We had to throw everything out. And I'm like, okay, so we just spent a year and a half preparing all this stuff. We just lost $250,000 that we didn't have and borrowed. And that was like my first real business loss, and I didn't know what to do. My dad's just like, well, just keep on going. We just get it sorted out. We bring in new product and we sell like hotcakes, right? And we did. We turned it into a booming business, and we found more products that were actually even more successful, way easier to make more money and sell and ship around the world. And we just kind of kept going that way. But man, we were set back for about 2.5 years in the hole. And I didn't think we were coming back. But I've taken huge losses with stocks. I've invested in companies. I've lost 100% of my capital. It's just disappeared, right? Like a lot of people don't know how to run businesses, I've learned. And I find the ones who do the most damage are all the ones from these high-end universities that have these business degrees. And you're like I have real life business experience. They have like books. And I'm like, guys, you can't do all this stuff. You're going to kill the company. And like,
And the worst part is they think they know what they're like convinced they know.
oh man, they're so I've learned a lot. Pretty
Oh
much,
my
this
goodness.
the smarter you are, the more you have. It's like, no, go give me somebody who's like done it from ground zero. I trust them more with my money.
Somebody that's hungry, works hard, puts their head down, and yeah.
Whatever has to be done, you make it happen. You don't pay yourself huge salaries and say you're better than everyone, and we're going to think about it. We're going my way.
Show me the guy that's in there at night scraping the floor because they got to change the floors the next day. That's the guy I want. Yeah, no, I'm with you.
Yeah.
So, is there a tool in all of this? Is there a tool or a thing that sticks out to you that you'd suggest to our listeners that they should lean into?
I think there's a few big things I think people could lean into. I'm a big fan of diversifying. Your crypto and real estate. I love real estate. I love the stock market. Which when I say stock market, I mean stock market. I'm into precious metals. I'm into currency. There's. I know you've got a book on real estate and closing. I think people should learn about multifamily units.
Oh yeah.
duplexes, tris, quads. At least it's easy, low cost to get into. Get into that to get your feet wet. So you've got passive income. You can live in one. I mean, it's such an easy way to get into the real estate market and reduce your cost of living and reduce your exposure. There's a, so I think people learning into that. Um, I think people, if you get into the stock market, it's a very convoluted. There's a lot of people selling a lot of crazy stuff, and
There's a lot to
people.
know. Learning curve is steep, always in my mind.
It's super steep. I have a lot of people say, "Oh, I want to learn to day trade, and can you show me your short-term indicators? I want to do all this." And I'm like, "Okay." The reality is, it's going to take you at least 15 years to really feel the vibe and understand it. It's never ending. You always have to improve and adjust. Um, do you want it to become you have to dedicate your life to it if you want to be really good in finance. And that's what I've done my whole life. It has been my focus. I live and breathe it. To me, it doesn't feel stressful. It doesn't even feel like a game anymore. It's actually really boring because I see things coming and going days in advance. And I'm not worried about the intraday noise and chop of all that stuff. So people just need to understand, I think real estate is the way to go. I think understanding how to play market tides, like what I do. I wrote a book, which if somebody's watching this, you can see where my shoulder, it's called Asset Revesting, which is we're reinvesting our money into different assets. And
Yeah.
so we could be long the stock market for a couple months, and then we might go long just into a currency, or we might be into cash, or we could be into, precious metals or real estate ETF. It can be all kinds of different stuff.
Yeah.
Um, so you just need to kind of decide what works, for each individual and how much time you want to put into it.
Yeah.
And then kind of go from there, right? Everything's got its own limitations and how much stress and how much capital you want to.
Stress, bandwidth, all the things that you're willing to allocate to it. I mean, that's really everybody wants to be an expert, but are you willing to do the work necessary to actually earn that title, to actually, there's a cost with anything. I mean, as you talk about multifamily, I mean, this is the most bearish I've been on multifamily.
Yeah.
Personally, and I say the most bearish. I've always been very bullish on multifamily for the last. I mean, coming even to the housing crisis, I was buying as those prices were going down. I was buying as it was nearing the bottom. I was picking stuff up, and I rode it all the way up.
Yeah. Nice.
But I'm actually more bearish than I've been just because of how badly
Well,
short-term rentals.
yeah, I follow real estate closely. I talk about it all the time in my newsletter because it is actually the biggest part of my portfolio. I own a lot of property. It's much bigger than my stock and bond trading portfolio. I talk about it all the time. I think we're coming to a major cycle. It's why I'm kind of trimming one property off just to get rid of the headache.
Yeah, no, that made sense based upon, if your self-storage, that the storage space is always one of those things that it's discretionary income. People will move it all back into the garage kind of thing.
Yeah.
It's those luxury kind of items, movie theaters, restaurants.
Yeah. So
I really enjoyed the conversation when you were talking about that because I'm like, yeah, no, that's the play. I mean, that's one of those things to go. We had multi-warehouse when the housing market tanked. So the bigger product.
Mhm. So
Yeah.
some of the data in the States. So like I talk about this quite a bit in some of my presentations, which if you look at the data, it's very interesting. I mean, the housing data and housing starts, all that stuff is starting to fall. The one that stands out the most that happened last time, just before the big '08 crisis, was a big pop in multifamily permits. And so as you know, multifamily is the cheapest to build because you get to share common walls, you get to have one property for the same building, you get economy of scale. And when we have a huge spike in people building multifamily, it happens almost every time just before the housing market gets very weak. And that's because savvy investors are like, well, it's just everything's way overpriced to build a single family home and turn it into a rental. The numbers just don't work, right?
Yeah.
And so all the investors are now squeezing, like, where can we squeeze more out of the market? And they're like, multifamily. It's the lowest cost to build. It's cheap. The rentals and all that stuff. And so we've seen this. And so that to me is like a huge red flag that,
It's
okay.
even more concerning than that, Chris, in my mind. I don't mean to interrupt you, but I mean, this is the space I've been living in. We have a product that didn't exist before, which is these short-term rental properties.
Yeah.
And because of the reduction in discretionary spending between the inflation kind of eating people's lunch and the fact that we had a hiatus on student loan repayments for 2.5 years, we got equilibrium in the market, that the supply and demand of short-term rentals, people allocating properties to that spiked way up.
Yeah.
And then the demand for it fell off when student loan repayments restarted and the pain from the inflation started to get felt.
Yeah.
So we've seen a mass exodus and repurposing of short-term rentals into the long-term rental market. And my builders who were using their disciplined approach to bringing multifamily to the market, they're not getting the rents they thought they were going to
Yeah.
because we have this shadow inventory that nobody really was tracking. I don't know that anybody really has their finger on the pulse. I mean, you can look at Air DNA and things like that to try to track how many units there are in supply. But I mean, there's just been so many people that are, why am I going to do this aggravating business when I could make as much or maybe a little less as a long-term rental and just have guaranteed income for the next 12 months? And so that mass exodus has actually been the thing that's been diluting our rental pool and softening our rents nationwide, at least in the US. That's what I'm seeing in every market that I go to.
Yeah, rents have softened. I know a lot of people who bought homes in the peak of the bubble over the last couple of years, and they're struggling. They're struggling to cover rent. They're struggling to get renters, period, for some reason. I mean, obviously, it's difficult because people paid a premium for a house. They need a high rent to cover their costs. And the main problem with most people is they always extend themselves to the limits when it comes to real estate. They're like, ooh, this one's so much nicer. It's a little higher than we wanted to go, right? And then as soon as things get a little weak and layoffs or business goes down and real estate gets soft and rental properties, you don't get as much rent. It's like, oh crap. Now I see why the banks didn't want us to stretch beyond and we did it. And so people feel the pinch. So yeah, it's
I think
anyway, long story short, the data points, I'm a big on data. When you look at the data of real estate and what has been moving and the multifamily pop that took place, to me is a red flag that this is the last space in real estate to make a little bit of money before the bottom falls out. And we have subdivisions here that we're set to get going and they have completely stopped. They're not doing it anymore. I know some people that actually have subdivisions with all kinds of investors. They were ready to go. They've already put in like tens of millions of dollars, and a bunch of the investors just want out. They're backing out, and they don't want to do it because they see, they're like, holy crap! If we open this can of worms, I'm going to be in it for another 30 or 40 million, and it might not work out that well. It could take 10 years.
Well, I mean, the problem really has been because I am a builder developer. I'm a general contractor builder, and I mean, we're getting squeezed on every single side. Permitting takes so much longer than it used to. Engineering plans take so much longer than, and the turnaround cycle. My cost of capital is much higher than it was a few years ago. And in the U.S. at least, I can't speak to my brother over here in the north, but we're showing that we're about 5 million homes behind where we should be to meet the demand. We've been building about 400,000 homes fewer than we're supposed to, than what the demand has been. And I know why. I mean, that's the reason why I'm not building single family homes right now. The risk side of it and my cost of capital is so high that my profit margins have to be so tight, and I don't have comps to really back up the price that I need to sell to in order to take and liquidate my position. Plus, I have all these environmental concerns that keep getting piled on me. A year and a half, 2 years ago, they did a thing with air conditionings. Well, now the same air conditioner costs an extra $1,500. That's another $4,000 in purchase price that I got to pass along to the consumer. So they're fighting for home affordability by making everything I have to do more expensive and difficult. It's interesting. I mean, even supply chain still isn't what it was prior to COVID. We still don't have that certainty of materials arriving, which now my length of time for carry costs. All of this is like, you're doing it with data points. This is the messiness that those data points you're talking about all kind of are summarizing. And it's a beautiful thing to see.
For sure. Yeah, we need an economic reset because this will bring equilibrium to a lot of this stuff, right? Like right now, it feels like everybody's gouging. Everything is so expensive. We have all these kind of, I kind of just say they're fudge numbers in the United States because, and in Canada, because all this talk of Trump and the tariffs, we saw a huge surge of entrepreneurs buying and importing everything before these tariffs came. They're like, well, let's buy like this year's worth of inventory now before we have to pay 20% more for something. And so all these businesses are loading up. And so we have these I think we have these fake strong numbers because all these businesses buying stuff. But the reality is we have a ton of inventory that's going to land in North America, Canada, United States. And if the economy goes weak, we're going to have this huge surplus of stuff. And an economic weakness means there'll be fewer builders. There's businesses are going to like lay off people, and there's people are going to have all this inventory. We're going to see prices eventually come down, and people won't be gouging for anything they need done. They'll be like, you know what, I need this job. I'll do it for this much. And eventually, the prices I think will come down. I don't know how much, but I sure hope they come down a good chunk.
I don't know, Chris, because I'll tell you what I look at that makes me kind of counter that. Median home price, United States of America, 1970, $17,000. Interest rate, 7.5%. Beginning of the last inflation, depending on how you ask, 70, 72, or whatever. The U.S. came off the gold standard. Things went nuts, right?
Yep.
By 1980, median home price was $47,200. Interest rate, 16.63%.
Yeah.
177.6% total real estate appreciation, which far outpaces the normal 55 to 65% decade long, like stable supply, stable inflation. That's what you expect. So real estate did really, really well. The prices nationally of real estate didn't fall until 1991, and they fell 0.3%. And they did because of the savings and loan crisis that we had and all that kind of stuff. I mean, the real thing that's weird is that we haven't seen, North America wise, we haven't seen this kind of inflation in 50 plus years. So that's, for me, I'm looking at inflationary markets to take and see, and I don't see prices coming back down in a meaningful way, because what they've done is they've just devalued the money. And there's no cure for that, because deflation, what Japan has seen, is absolute economic suicide. Making your money more valuable is brutal. So unless there's some other way to squeeze it, but I can say as an entrepreneur, man, and I'm sure you feel it, they're squeezing me pretty hard in every possible way.
Yep, for sure.
So, I mean, the thing that I see, and when we exited the last inflationary market, it was because they came in and they recognized this relationship between you and me. You're the CEO, I'm the employee. I come to you, I say, Chris, I need a raise, man. I can't afford to live. Well, you got a problem. You give me a raise, you have to increase your cost of goods. It's more inflation, right? So that's why they want a weaker labor market. So you could say to me, Josh, go jump off a bridge. I got 15 people lined up to take your job. That way I don't get to pay. That's what the Fed is asking for, right? They want that softer labor market so you don't have to give me a raise. That's what's the unspoken, but that's what's really going on, right? It's going to keep wages from going up. Well, at some point they realized there's another person at that table, which is the tax man. And they gave us huge tax cuts so that you could take and give me the pay raise without having to raise your cost of goods and hurt your profit margin. You could still maintain your responsibility to your shareholders to show profits. Well, in the U.S., there's not, the taxes we had in the 70s were incredibly high. Not compared to Canada. I know you guys have even higher taxes, right? But for the U.S., it was very high. They gave us big tax cuts. And we were able to, they want to give Paul Volcker all the credit for taking interest rate to 21%. Those rates were really high, and it didn't seem to help. It's when the tax man said, hey, look, guys, Chris, Josh, you know what? I'll take that. I'll take less. Now you could give me the raise without actually hurting or increasing your price cost of goods. I don't think that option exists. The one that I have hopes for, and not from a political standpoint, just because it's another player at the table that could take a haircut and maybe leave us some breathing room, is energy. If we're able to drive the cost of energy down in a meaningful way, then you, Chris, your cost of production for your material, whatever it is you make, that comes down. And then maybe there's a little bit of room for you to give me a little something. Maybe if energy comes down, I don't need quite as much because I'm not paying as much for energy. And we could kind of get this spiral to loosen up a little bit. And get us to the place where interest rates can soften a little bit and we can have a little bit more easily floating credit. But that to me is the big hope. I don't know that happens or that even works. But as I look at it and kind of studying an inflationary market, that's always what I do. Like whenever there's a market is doing something weird for me, I pick up a history book. Last time these economic pressures were applied, how did the products move? How did they go?
Yeah, that makes sense. I mean, Trump's got what? He got the Gulf of America now. They're just going to drill holes and siphon out all the oil and bring energy prices down, maybe.
Well, I mean, to me, there's an amazing book if you want, and I loved it because I couldn't tell what political side of the aisle the guy was on that wrote the book. It's a book called Energy for Future Presidents. And because energy is one of those tough topics, right? If you
Yep.
talk about energy, you're either climate denier or the polar ice caps are going to melt in about 47 seconds. Like there doesn't seem to be like this. There's very few books that you can read where it's just like a really good balance. Like I can't tell what message you're trying
Right.
to push.
Yeah. Yeah.
Um, and one of the things that I really wish they'd lean into, that is the cleanest thing we've got to take and try to give the green energy to an opportunity to become more efficient and more cost effective is nuclear. We have so many better nuclear options than what they point to as being this, very scary stuff.
I agree. I mean, I've been talking about it for the last couple of years. I'm like, and that's probably why nuclear uranium stocks have done so well. I think people see that it is clean energy. There's a lot of energy there. Um, and it's pretty darn safe with the new facilities that they can build. These little mini, they can have like one little mini plant per state and power the whole state, no problem.
Absolutely.
From the
And I'm
size of a house, like a standard house, they can do it. Like, and it's super controlled. So,
Yep. It chemically is built that if there's any kind of runaway reaction, it automatically breaks in such a way that it can't continue. Yeah, I mean, it's so cool to read. I love the fact that you like this stuff too, because I feel like such a nerd. I do want to get to a little bit of a lightning round, if you don't mind, Chris. Ask you a few
sure.
questions. The first one I got to ask you, obviously, is what do you see as the opportunity today? What's the opportunity in the market that's got you kind of excited?
Uh, the opportunity. It's funny. I'm off to Las Vegas here again. I meet with about 36 other highly successful business owners from all around the world, and we always have the same conversation. We're like, "Where's the opportunity?" Like everybody feels like you said, we're getting pinched and squeezed everywhere, and businesses are softening to some regard. We're like, "Where is the opportunity?" And this sounds so boring, but to me, the opportunity is like protect your capital. Something I think is about to break, and it's going
Yeah,
to become an opportunity, whether it's
sure.
real estate, equity prices. I don't know. Um, I'm in the bearish camp. I think we're about to come into a big reset, and so I'm more so cash rich. I have things that aren't going to completely crash. I'll take advantage of it when it happens. So I don't know where there's a screaming opportunity other than it's coming, and keep your gunpowder
So,
dry. That
cash, something,
yeah,
T-bill, something that's giving you a rate of return that's
yeah,
very,
yeah,
very liquid, highly liquid investment. All right,
yeah.
all right. Let's see if we could summarize this in a sentence. What do you think is the most important thing you've learned in the process of what you've done?
Um, Probably emotion, like managing my emotions.
Sure.
The stock market investing is super emotional, and under like I wrote an article. You wanted one sentence on find your personality type using Myers Briggs. Learn about yourself, and I have learned about myself, and I control my emotions when it comes to the financial markets very well. And so if you can control your emotions and have the discipline to follow strategies like
Yep.
rules, you're set. So you have to have discipline, which you have to understand yourself to be able to have discipline. I think they kind of go hand in hand.
Yeah. No. I'm finally getting to the place where I'm actually like obeying that a little bit. There was a stock that I was rolling, and like it, it 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 shot way up, and I had set my sale price. Like I knew I probably had a little bit more room, and I had set it too high, so I set my buy-in price. I'm like, ah, man, it's not going to get there again. And I started thinking about bringing it up and whatever. I'm like, no, I'm not going to. I'm going to hold. I'm going to
Yeah.
hold and wait.
Yeah.
And sure enough, it filled for me. And like
Yeah.
I was just sitting there rolling that little stock over and over and over again.
Yeah. Perfect. Yeah.
All right, simple question to ask, maybe tough question to answer. One book, if you could recommend one book besides your own. What is your book title again, my friend?
Asset Revesting.
Asset Revesting. I'm repeating that for everybody to hear. All right, one book you would recommend besides your own.
I'm an entrepreneur, so the one that really stuck for me was Built to Sell by John Warlow. How to
Okay.
build your business into something that's saleable so it has value and it runs without you. For an entrepreneur, it's a very basic, simple book, but I listen to his podcast all the time and I love it. And
Good stuff.
once you do what you love, and you have a team that does the dirty work, the stuff you don't want to do, the admin stuff, but you get to do what you love and do really well at. That is retirement.
Love it. Favorite movie of all time?
Oh man, I don't know. People will probably yell at me at this one, but the new Top Gun, my son and I have watched a
Such a good movie.
bazillion times.
Such a good movie.
I love it.
I, I actually, the part that stuck with me was the scene at the beginning, flying the Mach 10 plane in the sky. It was just such a beautiful scene. And then obviously it definitely gets your man vibe going. I mean,
Yeah,
it's an
totally. Yeah.
awesome movie.
Yeah.
All right. Famous person in history you'd want to meet if you could.
Probably like Napoleon Hill. I love
Okay.
Think and Grow Rich. I love those, listening to those old guys on YouTube, the motivational, all those different, all those guys.
Pioneers.
Yeah, totally.
Pioneers. All right. Person from your past you'd want to sit down with and have lunch with today if you could.
One of my friends, Phil, I called him Shaky Phil from college in Toronto, and he's always shaking. I can't find him. I have looked everywhere. Every year I go on Wave looking for him. Him and I were like two peas in a pod. He was big into computer space. I don't know where he is now. I don't know how to find him. But yeah, I'd love to sit down with him because him and I used to just laugh our faces off.
Love it. One piece of advice you'd go back and give a younger version of you.
um, Probably, I'm a long term planner. I'd say pick some goals, pick a goal you want, and kind of
Go
try
chase it.
and map your way towards it. So everything you do is really just steps towards that end goal.
Yeah.
I did a dream board in college, and I've done everything on that dream board. I reached it by the age of 27. And if you create a dream board and look at it all the time, I mean, it'll happen. I mean, what you think and feel in your body and you believe in, your body will attract vibrationally. Like the universe is unbelievable. I've learned a lot about the universe. Either you hate it or you don't get it or you love it, but the universe is so powerful. How you think and feel and what you want to have abundance to think of is unbelievable. But you got to believe and you got to want.
All right. Last real question. I actually have two. What's next for you?
What's next for me? So, Technical Traders is my baby. I love it. I'm building that baby up. I believe we are going to be the Kathy Wood in ARK Investments in the investment world. So, Kathy Wood in ARK Investments is like aggressive ETFs in crazy sectors. Well, Technical Traders and Chris Vermeulen is the investment strategy that everyone is going to have a portion of their portfolio who wants consistency, who wants above average growth, and wants that protection. Doesn't matter what the markets do. This strategy allows us to pull money out. So that is my vision. My goal is to help as many people navigate this market. But I'm working on a movie is my next thing right now in this invention that will be in the movie. It's in the clean tech and climate and teen mental health space. It's a family adventure movie, and we're just raising capital for it right now and getting some product placement. And so that's something we're going to be shooting starting late this year. And we were keynote speakers in London, UK last year about this at a clean tech summit. So that's the next thing, is get into the entertainment space. And it's really, really exciting.
All right. Where can people find you, Chris?
They can find me on YouTube, The Technical Traders, or they can go to my website, which is thetechnicaltraders.com. And pretty much everything you and I talked about, I share every day, and with my newsletter, my subscribers there, and copy the trades that I do in my portfolio. It's you ride my coattails. I found a way to ride the market coattails, and everybody else rides my coattails.
Love it. All right. Well, Chris, that's all I had, man. Thanks so much for coming and talking and sharing what you know, man. It was great.
Yeah,
Great
that was a lot of fun, Josh. Appreciate it. Take care.
Awesome. And all of our listeners, thanks so much for being with us. Reminding you always, there's never a good excuse not to know your shit. Till next time.